welcome to Sectors Up Close. I'm Elena Casas. Today we're talking clean energy and my guest is Randy Watts, CIO of O'Neill Global Advisors. The US could be set to pass its biggest ever package of climate legislation this week. The so-called Inflation Reduction Act would invest nearly $400 billion over 10 years in tax credits aimed at steering consumers to electric vehicles and pushing utility companies towards using wind and solar power. That money includes $160 billion in clean energy tax credits, $35 billion for manufacturing of things like solar panels, $35 billion for clean fuel and vehicle tax credits, and $35 billion in incentives to switch your home electricity supply to renewable sources. Well, that should all be good news for clean energy. This is the iShares Clean Energy ETF, and you can see it's spiked in recent days and is now up nearly 20% this quarter. But since a run-up when President Biden was first elected, there have been a couple of false dawns for clean energy. So is this finally the investment the sector has been waiting for? Well, let's ask Randy Watts, CIO of O'Neill Global Advisors. Randy, hi. Well, let's start with that question. How important is this investment to the clean energy sector?
We think it's very important. We think there's essentially two governmental trends happening right now. The first is, as you mentioned, the new Inflation Reduction Act that's moving through Congress right now allocates $369 billion to the clean energy sector in the United States. That's a very significant number. It is going to have an effect on the industry. And then second, over where you are in Europe, the decrease in Russian energy to the EU is really encouraging a faster transition to clean energy. If you look at the European Commission, they want to have 40% of energy come from renewables by 2030. So we don't think this is a false dawn. We think this is a real start. We're very excited about the industry. And as you mentioned, the iClean ETF earlier, that is actually up 6% year to date, while the broader market is still down double digits. So clean energy's been a leader. We think it's going to continue to be a leader, and this is a thing we think investors should have in their portfolio.
Right, but how dependent is this space on government subsidies? I suppose really I'm asking what happens if Republicans retake control of Congress and they scrap all this money?
Well, we don't think the money's going to get scrapped. It's very hard to take something out once it's in the U.S. budgets. Second, if you look at new builds for power production, clean energy is now running on par with fossil fuels. So we think that's very encouraging. In addition, we think the EV, the electric vehicle revolution, is here to stay. That's only going to accelerate. If you look at the U.S., they hope to reduce emissions by 40% by 2030, and to get 33% of our energy, our electrical energy, from renewables by 2030. So this is going to happen. It's going to happen rapidly over the next 10 years. And we think clean energy is going to be one of the main groups in the next bull market.
But a lot of this at the moment is motivated by the high oil price, of course, pushing people away from fossil fuels. Are companies going to continue to be motivated to invest in this if gas prices fall?
I think they will be because of the government regulation we talked about. I think fossil fuels will remain volatile. I think it is possible they come down some, but they're probably not going back to where they were a couple of years ago. So we think when you look at the sales growth and the earnings growth for many companies in this space, we think they're so strong that it's going to be impossible for investors in the market to ignore them.
Now, from a price to earnings ratio perspective, a lot of clean energy companies are still quite expensive, aren't they? So is this really a good time to buy them?
We think it is, because if you look at secular growth around the globe, this is one of the few areas where you can find a lot of companies growing their sales 30, 40, 50%, and their earnings are moving in similar fashion. So it's very hard to find those kind of growth rates in very many other sectors of the economy. And I think the market over time, especially over the next 12 months, is really going to rotate towards companies with strong secular revenue growth, especially given how the economy has been slowing because of the Fed rate increases. So we think this is a place to be. And again, we think it's going to be a growth market, and this is one of the leading growth groups.
So where exactly in the sector do you see the most benefits coming? What picks do you have?
A couple of stocks we like, and again, these are stocks that my firm is involved in, and I'm involved in some of these names as well personally. One name we really like is Enphase. Enphase makes the microinverter that helps convert solar energy from a panel into electricity. This is a company that's growing its sales 50%. Earnings are up the same or more. It's a leader in its field. It's been a very, very strong stock this year. We think it has a great long-term outlook. One of the stocks we like over in your neck of the woods is Solaria Medio. It is one of the fastest growing solar farm developers in the world. They have focused initially on Spain and Portugal, but they're expanding into Italy. What's amazing about this company is they had about 1 gigawatt of capacity at the beginning of the year. By the end of this year, we think that's going to double to 2 gigawatts.
Well, thanks so much for that, Randy Watts, CIO of O'Neill Global Advisors. And that's your roundup of the clean energy sector. I'm Elena Casas, and this is Reuters.